Okay, well now let's have a look at graphical depiction of the marketplace. Now really, the marketplace on where global financial capital shifts in this wide ocean of money across the planet, where money shifts from one economy or one continent to another continent, from one country to another country, from one economy to another economy, and as various prospects for investment outlook changes, and you just get money shifting around the world. And it's really important to really divide the people who decide how this money is allocated around the world is into investors and speculators on the left hand side of the slide. So really the decision of where to put your money really starts, and really the larger time frame in participants who shift large amounts of money are your institutional investors, such as your banks, your insurance companies, your retirement funds, your mutual funds, your sovereign wealth funds, pension funds, trustees. And then in some form or manner, when they decide to reallocate their capital or reposition their portfolios, then you start seeing the orders come through in the marketplace. And depending on the economic climate or the geopolitical environment we live, will determine the level of intensity, the level of the tsunami effect of capital being allocated to the marketplace. And then we see that on the price ladder. We see those orders going through on the price ladder, and it's when these large institutional funds are having to reposition themselves with new information that they've gained from the economic environment, is us as intraday traders having the ability to know, well, when are they shifting, what does that shift look like, and how does that shift look like being depicted by the various orders that are going through. And then you get your retail investor, a smaller participant in the marketplace, but because there's so many retail investors that now have access to the marketplace, they are growing just by the sheer number of participants, and also people taking individual ownership, such as taking individual ownership of their money, not being at the mercy of pension funds anymore, or retirement funds, or the government supplying them into retirement. People taking ownership by investing and trading themselves. So you get the so-called beneficial shareholders and registered shareholders, and then we have the speculators, such as us. We are classified as a speculator, as the intraday trader, or traders of various different time frames, and we specifically are intraday futures traders because of the incredible liquidity in the futures space, and the ability to also to receive leverage. Then you also get your hedge funds who try and speculate and profit from how they see capital shifting and an opportunity shifting in the marketplace. And so you get the trader, and then locals. We are more, if we really had to define ourselves, we are local prop traders. The locals are really the lifeblood of intraday discretionary activity. Now, from this pool of investors and speculators, they and especially the investors, they then effectively either execute in-house or they outsource their execution strategies in order to shift of how they're investing their money. So they either phone up an execution broker and say, I want to buy $100 million or $1 billion worth of European equity markets in the future space. So they offload in the DAX, they offload in the Eurostoxx 50, and they phone those execution brokers. The execution brokers that they decide upon are generally the ones that offer them the best price. So they'll look at a portfolio of different brokers, and whichever ones are giving them the best price will really get the business. Or they do it in-house. They have an in-house function to execute all their orders, all their client orders. Now from the execution side, and the same with the speculators, you can get hedge funds that develop the idea, develop the strategy, and then they find their execution brokers. So they either do it in-house or they deploy it. But then from there, you have a whole universe of different execution strategies, and we'll be looking at a collection of different execution strategies and order flow strategies that some of these brokers do use in the marketplace, and then how we trade around them and make the various types of trading strategies to execute effectively. So those execution strategies can be either discretionary, so they phone up someone and one of their traders executes traders, or they could or the execution strategy could be utilizing HFT or algorithmic systems in order to optimize the pricing of offloading those strategies. And really the objective is to get the best price to gain more business. So if you're a broker and you have a great execution strategy, better than your competitors, you're going to get more business from your investors or your speculators. Then those execution strategies really try and some of these execution strategies actually try and profit from the execution strategies. So the client asks for a certain price, they try and execute a better price, so they either charge on the spread or on optimizing price. And really, you know, with all these, as I mentioned, with all these execution strategies, it unlocks a whole ocean of different order flow patterns that we can trade around. And depending on the intensity of these execution strategies and when they come to the market, really gives us, as you see, it effectively becomes our locals' playground. All the executions that are going into the marketplace, onto their price ladder at various times of days, or different types of investors are getting in the market, well, then you see from these executions different types of order flow patterns and how we trade and how we profit from them and how we understand them, whether these execution strategies are some strategies that can last over an entire day, over an hour, and then how do we maximize by extracting the best opportunities in order to work out what these execution strategies are effectively doing. So that's really where, you know, it gives you a holistic picture of how come order flow patterns exist. They really, the root of the order flow pattern is from the execution strategies from the various investors and speculators that exist in the marketplace.